Breaking news, Californians are about to get hit with massive insurance rate hikes. And if you own a home, you might not even get home insurance this year. Coming up, we've got the latest developments on California's increasing insurance crisis, and we're offering a common sense plan to fix the problem. I'm Carl DeMaio, chairman of Reform California and a California state representative representing District 75 in the California State Assembly. Even before the recent Los Angeles wildfires, the California insurance industry was already on death's doorstep, with a lot of insurance companies announcing that they were canceling policies and leaving the state altogether. And many Californians saw not only their insurance canceled, but they were then forced into the government-run insurance program called the FAIR Plan, which is an unmitigated disaster, very expensive, very poor coverage, and frankly, many people just decide to self-insure if they can. If they don't have a mortgage, they're able to do that. But it's a complete nightmare for people who have had their insurance canceled. If you're lucky, you may get commercial insurance, but your rates are through the roof. And I'm not just talking about double-digit increases. I'm talking about doubling your insurance costs, tripling your insurance costs, depending upon where you live. Now, the politicians in California and their enablers in liberal media, they will tell you the big lie that you're at fault for your insurance going up. You see, you're emitting too much carbon. Yes, climate change has created the insurance crisis. It's not the fault of the politicians. Don't blame them. Don't hold them accountable for your pain and your higher costs. That is a big lie. It is a proven lie. Climate change did not cause your insurance rates to go through the roof. Negligent politicians with bad policies caused your insurance rates to go through the roof. And we've got the receipts, the details as to how. First, let me give you the bad news. And again, this number that I'm about to share with you is misleading because it's a statewide number. For many Californians, the number is astronomically higher. Quote, State Farm asks for emergency 22% homeowners insurance rate hike in wake of LA wildfires, as though the wildfires caused the 22% hike. Now, this hike was actually a 30% hike that was proposed last July. And the state of California regulators said no to the 30% hike. So now they're back with a 22% hike. So let's first give people the truth. The wildfires were not driving the rate increases. Prior to this, State Farm had already implemented an 18% increase in homeowners insurance policies last year. And so we're talking about 18 plus 22%. That's nearly 40%. When you compound it, it's above 40%. That's if you're lucky enough to have State Farm be willing to write a policy for your home. What we're seeing is that many communities, particularly if there's any brush associated or in the area of that community, any canyons, any possible fire zone risk, we're seeing those communities absolutely canceled on their insurance. You're not even lucky enough to get the 40% increase over 2 years that these rates, in essence, impose. And so what most of these people are forced to do is go into something called the California FAIR Plan, which is government-run insurance. It only covers catastrophic fire. It covers nothing else. And the rate is astronomically high. In many of my communities in my district, because we have a lot of neighborhoods that are in that wildland urban interface where there's a lot of canyons, brush, forests surrounding the communities I represent. These households have had their insurance go from $2,500 a year to $10,000 a year. Some are seeing $15,000 for insurance per year for their property. This is no joke. These are real numbers. This is an absolute sucker punch to someone's household budget, particularly if you're on fixed income and don't have the ability to earn more money. We are now seeing people priced out of their homes, because their insurance rate has gone up so fast that they can no longer afford it. I'm warning you that your rates are not only going to go up, but I believe that California's insurance crisis is so bad that it will rival the subprime mortgage crisis of 2008 to 2010. Because when someone can't get insurance for their home or affordable insurance for their home, it will have a ripple effect on housing values. Because when you can't insure a property, or if you have to budget an extra $1,000 on top of your mortgage payment every single month just for a basic home, an average home, that has a dramatic effect on the housing market here in California. It'll take money out of the pockets, equity out of the pockets of every Californian. So I believe we need to fix this crisis. Now, what the liberals are saying is that it's all climate change. Climate change caused it. Don't blame the politicians. They're not at fault. Bullshit. They are absolutely directly driving this crisis. They've done it because two things. Number one, there is a higher risk profile in California because we've not managed our forests and wildland urban interface areas properly. We're not allowing homeowners to clear defensive space because of the environmental regulations. Even clearing homeless camps, which again, homelessness causes fires because you have camps and the homeless always are starting fires and they have little stoves and whatnot. But we've seen a spike in the homeless fires in these canyons. And even if you're trying to clear out the homeless camp and reduce fuel load, the environmental regulations in California are so cumbersome that it takes 18 to 24 months, expensive process, and it's impossible. So homeowners with private land holdings and also government agencies that are supposed to be managing these canyons, the backcountry, these government agencies have been negligent. They're not doing their job. They're not thinning the forest. They're not allowing for harvests. They're not doing defensive burns because the California Air Resources Board says that emits pollution. Well, how much pollution does a defensive burn emit versus an out-of-control wildfire? Again, these people are not even good for the environment. So the first thing we have is higher risk than the insurance companies are allowing because government has failed to properly manage the fuel load on lands around structures. That's not climate change. That's negligence by government officials. The other issue we have is the skyrocketing cost of inflation, particularly for home repairs. That's gone up by about 70% in the last 4 years. The cost of repairing any item on a home has gone up by 70% because of the inflation created by out-of-control politicians spending way too much money, borrowing, printing money. That, again, is a national problem. But here in California, our cost of living and our construction regulations, the mandates, the permitting, all of that for construction, for renovations, through the roof, astronomically more expensive here in California than anywhere else in the country. That is driving the insurance crisis, not climate change. In fact, we haven't had an increase in the number of fires versus historical averages. We have had an increase in the severity of fires because we haven't properly reduced the fuel loads. And we also have had an increase in the payouts to replace damaged items and damaged structures. We also see the same thing happening in auto insurance rates. It says here, why are auto insurance rates going up? What, did climate change make people worse drivers? No. The cost of car repairs is higher because, you guessed it, the inflation. But more importantly, more vehicles on the road are now electric vehicles. And when you get in an accident with an electric vehicle, you just dent an electrical vehicle and it is $10,000 for a small little bit of damage. And so with about 20% of vehicles now in California being electric, we have a higher cost of repair whenever there's a normal accident. Again, insurance rates for homes, insurance rates for autos, sky high in California. And we are uniquely burdened by this crisis versus other states. Other states have challenges. We have the worst of the worst. California politicians want to raise your rates, and we're talking massive increases to your household budget. I believe there's a better way. I don't think you should have to pay higher insurance rates for their failures, their failure to do forest management, and their failure because of the inflation. No, I think we ought to take it out of the hide of California politicians who have failed us. That's why at Reform California, we have a California insurance stabilization plan. It has multitude of reforms. Number one, we want to reduce costly regulations that are impacting the insurance industry, that are preventing the insurance industry from offering market-based products. Right now, government regulates so much of the insurance market that it's so much more risky for them and more expensive than any other state. We need to have multitudes of products to meet the different needs of consumers and let consumers decide what insurance type they want to select. Second, we have to dramatically overhaul wildland fire management, allow for harvesting of forests, reduce the fuel loads, allow for defensive space. If we don't fix fire management, we will never reduce the risk. Third, we need to stabilize rates. And this is what I'd like to see happen by giving you a rate relief allowance from the state general fund. How are we going to pay for this? Number one, the state of California politicians collect $3.6 billion in insurance taxes every year. I don't think the state of California should profit off of price gouging rates for insurance. So the politicians ought to give you back every penny of insurance taxes they've collected to help soften the blow from their bad policies. That's $3.6 billion a year back in your pocket to reduce your rates. We also know that there's a climate change budget in the state of California, $10 billion a year just through cap and trade. These are also taxes. Your money stolen from you, higher cost of electricity, higher cost of gas, higher cost of virtually everything. $10 billion is collected a year. Since the politicians think that insurance and climate change are related, fine. Take that $10 billion, add it to the $3.6 billion in insurance taxes. That's $13.5 billion worth of funding to stabilize rates for homeowners so they don't get priced out of their home. It's the least we can do because the politicians are at fault for this crisis. Now, I guarantee you these politicians will continue to lie to you, saying it's climate change, not their fault, and they will continue to profit off of your misery. They will continue to take that $3.6 billion of insurance tax bounty and put it into their black hole of their general fund to pay out illegal immigrants free health care. We need to demand that this money be returned to the people that are being hit by these astronomically high rate increases. Join us at reformcalifornia.org, reformcalifornia.org. I can't force this reform program through without your help. And then, yes, I do believe that not only do we have to educate the voters and put pressure on politicians at the ballot box, but I think we're probably going to have to put this on the ballot in the 2026 election. Help me accomplish reform. Let's not impose the cost of failed policies by politicians on the backs of California homeowners. They can't afford it. Go to reformcalifornia.org, chip in a contribution today, sign up at the bottom of the website to be part of our volunteer base. Until next time, Carl DeMaio, Chairman of Reform California. Thanks for watching, and I hope you enjoyed this episode. But before you click away, please subscribe to this channel and click that notification button so you get updated when we post new episodes. Plus, like this video and share it with your friends so that we can help spread our message across the state. Reform California with Carl DeMaio is paid for by Carl DeMaio for State Assembly.